Been a tough year being a property investor? Rising interest rates got you second guessing. Not sure who to turn to for help? You need to reach out to Australian Property Scout, one of Smart Property Investment's most trusted buyers agency. Director Sam Gordon has personally helped many SPI show listeners invest to reach their financial goals using his purpose-built strategies. So what are you waiting for? Head to www.australianpropertyscout.com.au and book in a call with us today.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Welcome back to a brand new episode of the Smart Property Investment Show. As that tagline says at the beginning, the podcast by investors for investors. I'm lucky enough to be joined by Kane Jury on today's episode. Kane, you're zooming in from the Gold Coast, I think it is today.
That's
Welcome
right.
to the show.
Pleasure to meet you.
Kane, I know you work with Arjun over at InvestorKit and you are an associate buyer's agent with him, but also talking about that, that's not where your story and your property investing journey began. So I know we're going to have to take a few steps backwards there. What was it that originally got you interested in a property portfolio?
I remember quite clearly it was a book by Steve McKnight, and it was, I think the title was 0 to 135 Properties in, I think, 3.5 years. And I read this book and I just got hooked and went to a few seminars and just went out and bought my first property. So at 22, I purchased my first property after reading a book and that sort of kicked it all off.
There you go. I don't want to necessarily give away your age here, Kane, but how long ago was that? Because I'm thinking of, seminars. That feels like a bit of a day gone by.
It was before Facebook. It was before social media. I remember I used to go down and get the Property Investor magazines every month. I'd have it marked on my calendar. I knew exactly what day of the month the new magazine got released. And I'd read the magazine from cover to cover. And I've still got about 6 or 7 years worth of magazines stored in the shed that I've never thrown away. My wife hates them.
So 22, pretty young to be getting on the property ladder, but obviously something that you were saving up for and planned for. How planned then was that first purchase?
Probably not as much as you would think. Obviously, finance markets were very different back then. Being in the military, I joined the army when I was 18. I had the combination of the first home owners grant as well as a military grant that you could get. So I literally paid out a motorbike loan one week and went and signed a contract the following week.
There you go. So was that a principal place of residence or was that,
so the first one was.
Okay. So you're going to live in it?
Yeah, I lived in it just to qualify for all the grants.
So talk us through that first purchase then.
I was in North Queensland and it was a $170,000 townhouse and I lived in it for probably 18 months before I went and purchased an investment in South Australia, purchased that sight unseen. And then only 3 or 4 months after that, my girlfriend at the time, now wife, we purchased a house together and then rented the other 2 out.
So how long ago was this now? I'm just trying to work out, what the market might have been like at that time. Are you able to share that?
Yeah. So, the Adelaide property has done very well since, and that's just moving along nicely. But the North Queensland market was probably, and this is, I guess, a lesson learned, that you don't know what you don't know when you're 22. And buyer's agents weren't much of a thing back then, and data wasn't readily available. Like you go to the back of the magazine to check the vacancy rates. So they stagnated for a very long time. And there was a lot of opportunity cost in that because not only they didn't grow in value for so long, but then I couldn't leverage into other assets because I was sort of sitting waiting. So it did absorb a lot of time, I guess.
Do you still have that property?
Yeah, so I'm very stubborn just as a person and because they hadn't grown, I was like, I'll hold these till they do. And so I've got a motto that you never, ever sell unless you really have to.
So you'd finally be reaping the rewards of that holding then up in Townsville?
Yeah, and we've actually started buying in that same area and the data is really strong for the next 3 to 5 years. So we're quite excited about that market. So my stubbornness is paying off.
So we've got through 3 properties now. What year was that first What year did you sort of kick this all off?
2005 was the first, December 2005, it settled. And then 2007 was 2 and 3.
Mm-hmm.
Yeah.
So, yeah, you're in the military then. I understand that you're not doing that anymore.
No, so I served for about 12 years. I discharged as a sergeant, and I had a job offer land on my desk in the mining industry. So worked with Downer as a national supervisor for 3 years, and then moved over to Rio Tinto for another 3. And we purchased a few more properties along the way over those years. And then we're in Perth with Rio Tinto and really wanted to get into the property market as an industry, and started my own business. No one's going to employ a mining supervisor as the broker, so I started my own business as a mortgage broker, and did that for about 6 years.
There you go. So you've had your fingers in a lot of pies over the years, Kane.
I like to call it experience, but
For sure.
Yeah.
So, I mean, that has obviously always been able to fuel then you to continue adding properties and adding to your own portfolio.
Yeah. And we were purchasing our 7th property, and Arjun was actually the buyer's agent. So I'd seen him on a lot of media and stuff, and we engaged him to buy a property in our super fund. That was in Toowoomba. It grew very nicely over the first 12 months. We did very well with that one. Just a good asset to pick at the right point of its cycle. And it was during that purchase that the conversation turned from, hey, Arjun, what are you doing with InvestorKit? What are your growth plans? Are you moving to Queensland? And that sort of 12 months on from there is when I started with InvestorKit.
There you go. What I do want to know then is, over that period, obviously you've kept accumulating properties. What has been your end goal this whole time? Or has that changed over the years as well, given you've had a fair few career experiences as well?
I guess the goal in the early stage was to establish a career in the industry that I enjoyed. I was very good at brokering and enjoyed it, but didn't enjoy so much dealing with the banks and the paperwork, getting buried in paperwork. And I sort of did a lot of first home buyers or refinancing the family home, which didn't really give me that investor conversation that I enjoyed so much. And it was just timely that we were using Arjun as a buyer's agent. You know, that conversation turned to moving from brokering into buyer's agent space.
And what about with that portfolio? What are your aims to get from building up that mechanism behind you?
I don't know if I have an end goal. I like success is a journey, not a destination, I guess. And because I chased the career change to being a buyer's agent, and I just chased it for so long, and now that I'm there and I've got it, I'm just happy doing, and I'll always continue to buy property, I think.
Mm-hmm. We're going to take a quick break there. We'll be back in just a moment with more from Kane Jury.
Whether you're a first-time investor or already have a healthy portfolio, we all know there's a lot of stress that comes with property buying. That's why best-selling author and regular guest on the Smart Property Investment podcast, Paul Glossop, has outlined all his battle-tested investment strategies that have helped him and others upsize their portfolios, avoid money-draining pitfalls, and build wealth through property investing. Get your free copy of the best-selling book, A Surfer's Guide to Property Investing. Head to purepropertyinvestments.com now.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Kane Jury. Kane, just before the break, you mentioned that, that move into the property industry for yourself has sort of been a real career goal, career milestone for you to achieve it. I'm very curious what it is about property that you do love.
I think you can be very passive or active as you like. So I like to be more passive, that buy and hold and let time do the work. But if you do want to get in and do a few renovations, get creative with your portfolio, you can. There's many directions you can go with it.
And I mean, you talked about having a little bit of a glimpse of this in your work as a mortgage broker, but it obviously wasn't quite enough to be, having, I guess, those strategic conversations and thought processes that you can now have.
Yeah, I think you just get buried in a compliance and paperwork as a broker and stuff. And I remember the point where I knew I wanted to make the change. I went to someone's house and sat down with them, and we reviewed the current mortgage and the equity, and they wanted to buy an investment property. And I poured all this knowledge into them, and they loved it. And it was a great meeting. And I walked out the door with, as a broker, roughly $1 million worth of loans to write. And it made me a little bit nauseous, like the thought of having to go do the loans. But I love that conversation I had with them and helping them understand investing in property and equity and the structure. And that was when I knew I had to actively pursue the change from brokering to buyer's agent.
It still would have taught you so much, though, I'm guessing, about the process.
A lot of knowledge in banks policy and structure and how to present yourself to get, because the broker or the banker is the gatekeeper to the debt, and the debt is what allows you to build your portfolio. So a lot of great knowledge over the years. Yeah.
Absolutely. And that's so vital now, isn't it? We're seeing, especially with interest rates change and a different lending situation than what we were even seeing 12 months ago. Having that under your belt's got to be helpful.
Very helpful, but also contacts in the industry as well, and other brokers and BDMs at the bank. So yeah, definitely really enjoyed my time as a broker, but I love what I do now so much more.
And you talk about that conversation and walking away from it and how good that conversation felt about, helping someone out with buying an investment property. What are some of the things that you really, really love, drilling down into?
I'm very passionate about young Australians getting into property early, because like I touched on earlier, you don't know what you don't know when you're young. But if you can just get one thing and get into the market while you are young, the time will do amazing things on your portfolio. So I love the moment when you sit down with someone and you educate and help them understand it, when they have this light bulb moment, I guess, and then when they go do it and you're there along that journey with them. So I'm very, passionate about getting into property young.
And now having so many properties under your own belt, have there been any massive lessons learnt that you then go to everyone else, don't do what I did?
Heaps. No, so I guess like I touched on, that first one didn't grow too well. Number one mistake is many people make is, I live in Coogee, so I'm going to buy an investment property in Coogee, but they don't research where Coogee is in what stage of its cycle it's in. And you can actually purchase sight unseen. And if you know the data points to look at, you can pick somewhere that's going into a growth phase, not into a stagnated phase. You
would have purchased, when you were talking about buying that property in South Australia all those years ago now, buying sight unseen would have been going against the grain and something that a lot of people wouldn't have been comfortable with back then. Was it an intimidating thing for you at all?
No, not really. I think I'm more of an aggressive style investor. So I just don't think about things too much. I sort of am more of an action, a goer, a doer, and I'll think about things afterwards, which can be a downside as well, I guess. But yeah.
Do you take that strategy through when you're doing work for other people, or I know that with Arjun, everything is so data centric. You probably can't just make those snap decisions like you would have back in the day.
So we have such an amazing team at InvestorKit. Like, we have a whole team that look after the acquisitions, and we have a research team that do all the data and the research and that. So we always have this like a conversation as a team, and Arjun will often say, "Oh, well done, Kane. You brought 5 properties over the weekend. Clients will be happy." I'm just at the pointy end of an amazing team. So I get to do what I say is the fun part, that go out and buy the property, but it's all the hard work that the team, the research, the acquisitions, the due diligence that we do as a team, that I'm the glory hunter that goes out and just buys the property. So
there you go. You just brought up due diligence. That's obviously a pretty important thing. All the more important, when we are seeing so much more scrutiny of what's going on at the moment. No one wants to make the wrong deal at this point in time. It's not as forgiving of a market as it may have been, 18 to 24 months ago. What is it about due diligence that, it's just really, really important? I'm thinking for all those listeners out there that don't deal with property day in and day out like you are. What are some of those things they need to be thinking about?
We just have a look at the headlines over the last few years, the amount of floods that, there's been floods in Sydney and Lismore in North Queensland, in Brisbane. And we've had an investor that come on, they had some property, they had one property that had been flooded. And again, they just didn't know how to flood map an area and check that out. And that would have saved them thousands of stress, but also of money. And then there's also the location research. So the opportunity cost is huge. The opportunity cost of my first property in North Queensland that didn't grow, I couldn't leverage into more property. Or we've had a client come on board, they were looking for 18 months for themselves in Adelaide. This is probably 12 months ago. But they've been looking for 18 months, and the market had moved so much without them because they didn't know how to price up an asset. They would look at Adelaide's the listing price versus what actually sells for. There can be a bit of variance there. So people will just look at the listing price and they'll put an offer in, but they won't know how to look at comparable sales to then determine if a property is superior or inferior compared to the one you're looking at, what it's going to sell for. So the opportunity cost for them of looking for 18 months was quite significant, talking 15 to 20% that they missed out on over that time. So I think there's a lot of due diligence in the deal and the research in the area that can change from a mediocre portfolio to a very successful portfolio.
Jumping back just a step slightly there, and on that flood point, as you said, there's been a lot of floods and occurring more frequently than they've done in the past. Is that something that people should just be steering clear of, anywhere that has the potential to be inundated by water?
I think it is like a steer clear. Like if you were to think about having a property, you live in Sydney and you've got a property in Adelaide, if it was to flood, the heartache of having to go through managing that process, hopefully you've got insurance, but then if you've got to coordinate tradesmen and things like that, you can really impact your portfolio. So I think, along with bushfire checks, housing commission checks, there's so many things that you can do that can take your portfolio to the next level.
Do you think many people are doing those checks when they do, they see a bargain, they think that would be a great investment property, I should get it?
I think some people that you will come across will be quite savvy with that type of research, and then there's others that wouldn't. But every single asset 100% passes for us.
How many data points for that kind of thing and that due diligence that you're doing? It's probably too many to even count, but, what are the major things that you are looking at that the average buyer just might not even think twice about?
There's many data points you look at to see heat in the market, like vendor discounting is low, trending lower, sales volume is increasing, listings are decreasing, days on market is low and trending lower. And then there's other things that we can look at, like infrastructure spend of an area, the infrastructure spend of an area per capita. So we can look at it per head count of the area to see how impactful it is.
Yeah, really cool. So how much time does it save for people to be not having to do this themselves when you've got a whole team of experts working behind you on this, Kane?
Well, yeah, I just don't know that it is the level that we do it at. I don't think the average person could do it because there's data that comes from all sorts of areas, and then to analyze it and interpret it and understand what that's actually meaning, I don't think the average person would have the knowledge or the resources to do it.
How much has it influenced you now that you work as a buyer's agent? You're working in the field. Has it really changed the way that you look now, even at your own investment properties and your own decision making?
Huge. There's just so many things that I've learned that I didn't even know existed, and how you can actually look at an area and know with confidence that it's going to grow in value, and it's rewarding. Like when a customer's or a client's, I don't know, they're unsure, but then when you can tell them everything, but then it's very satisfying to go back in 12 months and to know that it played out as you said it would, because the data suggested that. And the more that you see it, the more confidence you get in the data.
And I know that I brought up lessons learned a bit earlier, but beyond that, has now working in the space sort of shaped or changed the way you do approach how you can then be, looking at your own portfolio? Has it caused a rethink in any way?
It's definitely inspired me to go to the next level. So we have one under contract at the moment, and I'll plan to purchase one early next year and hopefully one at the end of next year. Because you sit there and you look at all these properties all day, every day, and negotiating on deals, and it's it's inspiring. And I'll turn from one of those people that I used to enjoy what I did. Now I absolutely love what I do, and I wouldn't change it. So yeah, I think it's inspiring and pushes you to. It's also a good feeling when you say to a client, "I've purchased in this suburb." So then they know, I've brought there myself. I'm not recommending it lightly. I've invested.
You have a vested interest in it also doing well, don't you?
Yeah. And that's what we say with our clients. We're in it together now.
Mm.
So, yeah.
Cool. Well, we're going to take a quick break there, but I want to come back and see what your future plans are for property. But then I also want to talk around those relationships that you're now building with people that are just like you, wanting to up their game when it comes to property investing. See you on the other side of the break.
Want to slash thousands off your home loan repayments? Whether you're an investor or homeowner, we know how important it is to find the lender that suits your unique situation and with the best rate. If you've not compared your home or investment loan in the last 12 months, you may be able to cut your repayments today with a different lender. That could mean more money in your bank account and less stress when it comes to paying your loan. Find out why more borrowers are turning to Finny to refinance their home loans. Call us now on 1300 002 023 and find out what you could save, or visit our website finny.com.au to book an appointment.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Kane Jury. And Kane, just before the break, you were talking about the relationships that you've been able to build up with people in the space. And it must be very cool to, as you said, be going on the same journey as the people that you're helping day in, day out.
Yeah, it's good. And we have many relationships across Australia because we are a national buyers agency where we'll look at wherever the data is strong is where and there's that market pressure is where we'll start buying. But we have many agents where you have access to like off-market opportunities as well. Yeah.
You talked about before being a mortgage broker and getting to talk with people about, some of those conversations, even when you were working in that space. But it must be pretty cool now that all your conversations that fun stuff, the stuff that you wanted to be talking about before?
Not always so much fun. Sometimes there's some hard conversations like building and pest negotiations for a client. Sometimes we'll negotiate a discount on the price or we'll get the vendor to repair some items and stuff. So they're not all fun conversations. There's some tough ones in there as well. And also helping clients understand a region, why we recommend it. They might not have heard of, a suburb in Adelaide and not like the sound of it. So there are tough conversations, but when you can link it back to so much research, it always helps.
When you're having those conversations, and we've touched on this a little bit earlier, but, the finance side of things and everything that you know from that side, how much are you still drawing on some of that insight and that knowledge to have these conversations? Because they've got to be tough conversations as well sometimes when you're just discussing finances. Yeah,
I think like my experience as a broker and also building a portfolio, it just gives you confidence in your answers and having those tough conversations because you're not doing it based on what I've learned from an industry, based on personal experience. And when people hear that you talk about whether it's growing the portfolio or accessing finance, when they see the enthusiasm or hear it in you and then the experience, a lot of clients warm to me quickly because of that.
Portfolio mapping obviously is a big part of that and what you're doing. What does that actually look like? Because a lot of people, I just don't think they even really understand when they do go to see a buyer's agent rather than doing themselves the kind of work, the background work that needs to be done before you even start looking at properties.
Yeah, I'm very much a numbers person. I love the numbers behind it. So, and helping people understand, depending on what you're trying to achieve and what that number is, you might not need 10, 15 properties. You might be able to achieve it with 4. So really breaking that down and looking at the numbers. Then if we can average 7, 8% on the portfolio over the long term, we don't need 10 or 15 properties. And to go through that accumulation phase, we can do it with 4, 5 or 6. So we're really getting an understanding of what's the goal and what do we need to achieve that without having, I guess, overexposure. Because there is risk with everything, and taking on a mortgage is a 30-year commitment. So if you can do it with less, so having to break down the goals, I guess, before you can really map it out.
I love that you bring that up too, because how many people in your experience are kind of flying blind when it comes to, they've just got this number in their head of the amount of properties that they want to achieve, but no real rhyme or reason as to why that's the case.
Everyone has a different understanding of where they want to go or what they want to do, or some people just say, I just want to buy more property. But I guess that's the pleasure of the job, that a lot of people are successful in their own careers and business and stuff, that they don't have that intricate knowledge, and not everyone wants it. Some do, some don't. But the fun is getting in there, understanding the numbers and the goal and breaking all that down and then saying, okay, well, if you want to achieve that, you have to be more aggressive than the average person. So we're going to need, 10 purchases over the next 15 years maybe, or, they might be very conservative and happy and very successful in their career, might have assets outside of property, and they only need 4 over the next 5 years. So, yeah, it is fun having those conversations and breaking it all down.
And I think the key point there really is that it's up to the individual journey, isn't it? You're not going to put anyone, there's no one size fits all approach here.
There's no cookie cutters in property investing. It's sort of, again, just where do you want to go with it and what do you want out of it? And then reverse engineer it to come up with a plan to make it happen. And when you do break that down, and it's a lot of the time you don't need this huge portfolio. You can really get away with just as long as they're those quality assets in the right market timing. You're not buying ones like 22-year-old Kane that they're in the worst stage of the market cycle you could have. And that's where the confidence comes in, where that data and research piece really can take it to the level you need it to be at.
So then bringing it back to your own experience and your own journey, Kane, obviously there's a fair few portfolios that you've got under your belt now. Is it 7? Is that where you're at, or no, more than that?
No, so I sort of, over the last 2 years, I went through a bit of a consolidation and shuffled some debt and sold. I actually broke my own golden rule of never sell. So that's probably a story for another podcast, I guess. And now I'm just going over, as I touched on, over the next 12 months, hopefully purchase at least 3. We're going back into an accumulation because we've had a lot of growth over the last few years, including rents and cash flows improved and things like that. So, but around that mark, yeah.
There you go. So are you positively or negatively geared with your own portfolio?
I'm going to be positive, very close to sort of a neutral positive point before a tax is brought into it.
Mm-hmm.
Tax benefits and that. So, but over the next 12 months, that positive to neutral point will tip down to negative, I'd say. But it's all just monitoring the numbers across the portfolio and knowing where you're comfortable with it.
Lucky it's your job now. You can spend all day, every day looking at it.
I know. It's great.
So for the future, beyond that, that next initial 18-month stage, where do you hope that your property portfolio will take you down the track? What is that ultimate end goal?
I think I'd like to move into over probably the next 5 years into commercial and maybe a couple of blocks of units, and even start tackling a couple of renovations and things like that, getting a bit more active on the side with those things while still continuing in the current role, helping people buy property, yeah.
So you're basically just doing it for the passion of it, Kane?
Oh, look, I do need to work. I'm not. But there is the passion. I love what I do and I wouldn't do anything else. And if I had 20 unencumbered properties, I'd still do what I do because the satisfaction is going to a client and helping them achieve it. And if you can give someone that light bulb moment where they understand like what property can achieve from a young age, that's the satisfying part that I love. I guess it doesn't matter how many houses I have, I can't get that from them, if you know what I mean.
I mean, it's a great way to look at it because you do see some people where they just, coast on it. And as you said, even just building up that passive income, they're not really paying attention to what's going on. But for you, it's all about being engaged every step of the way and continuing to learn and to continue to reap the rewards of it by the sounds of it.
Yeah, definitely. Like I love helping people. I mean, who doesn't like helping people? But if you can help them achieve their wildest dreams and goals with property and be along that journey with them where they come back for property too. I mean, I've had one client in just over 12 months with Arjun that's purchased his 3rd property and multiple clients that have purchased 2 in 12 months with me. So it's being on that journey with them as well. And when I'm personally buying in the same suburb as you're buying for them or that Arjun might have brought of or other members of our team, it's satisfying. It's the journey. We're on it together.
Well, I can't wait to see where this journey takes you, Kane. I'm sure we'll have a fair few more conversations down the track, but best of luck with it all. Keep enjoying what you're doing and keep us updated with all the latest.
Awesome. Thank you very much for having us.
Thanks so much for taking the time. To everyone who is listening along at home, we hope you have enjoyed this episode. Like or review us on whatever platform that you do listen to your podcasts on. If you have any questions, don't hesitate to reach out, editor@smartpropertyinvestment.com.au. As always, stay up to date with us for the latest news on our website. Subscribe if you haven't already, and check us out on social media, Facebook, Twitter, and LinkedIn. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Have you signed up to HR Leader? Go to hrleader.com.au to subscribe. Receive the latest HR and people leadership insights and news.